the focus is very clear. The most important thing, of course, is going to be about what they're going to say about stopping asset purchases and therefore paving the way for raising interest rates. So let's just put that out there. But I think you're absolutely right. The market has been quite worried for quite some time now that once they stop asset purchases, that this would put upward pressure on all sorts of peripheral spreads, and particularly sort of the BTP market in the Italian market. Now, in my mind, it's not very clear what they can do, and they have been quite vague about it. Nobody has put any kind of concrete parameters around what that could be, because you rightly say, on the one hand, they want to stop asset purchases, and on the other hand, they're saying, well, we need to contain spreads. Well, what we do know is that what's very unlikely is that they can only buy peripheral assets and contain the spreads that way, because that's most likely not going to fly in terms of the European treaties. So one of the things that I could contemplate is where they announce an asset purchase program in case something goes wrong, without saying exactly what something goes wrong is, if that's a certain spread level that they have in mind. But then on the other hand, as they've done in the very early stages of asset purchases, sterilizing the money that they're injecting through bond purchases, through reverse repos, so where they very distinctly have a different program with a different aim than what they had with a plain vanilla quantitative easing program.
Is there, I mean, look, if there are those people out there who like to take a punt and they're very short-term traders, is there any reason to buy the euro ahead of this ECB meeting? Because if they come up with some new plan that effectively defends the integrity of the eurozone, then that's another positive for the single currency at this point, isn't it? Even as it's perhaps been losing ground to the greenback's strength.
Yeah, I mean, first of all, I would want to say that as a house, we think that the dollar's strength is probably going to dominate everything over the next, couple of months. So therefore, I think you're stressing the short-term nature of this. I'm not necessarily convinced that even if they slip something in there, because we know that they're contemplating this already, because the ECB put it, or Lagarde put it in her blog already. The key thing would be if they came up with something concrete, tangible, where you really can hang your hat on and can evaluate, yeah, that's going to work or it's not going to work. And I think that's just unlikely. If anything, they're going to slip a sentence in, and that's what the FT article suggested as well. And that's very similar to the one that is in the blog post, which is, at the end of the day, very non-committal.